Good morning, everybody. This morning, we are going to focus on different markets. I will show you the chart of gold, so following the recent upside breakout. We'll also comment gold 2.0, which are cryptocurrencies, with a focus on the Bitcoin. Then I'm going to give you an update of last week's scenario on the US dollar with the confirmation of the technical breakdown on the US dollar. And we are going to finish with an update on S&P 500 and DAX 30 for European indices. First chart, so gold. As we discussed over the last weeks, a significant upside breakout on gold in June. So this has been something that a lot of people were expecting, especially technical analysts were expecting since a long time. And it's becoming reality with a very strong upside acceleration over the last week, following the breakout above this key resistance line, which was forming since 2013. As you can see, the first Fibonacci resistance at 1380 was quickly surpassed. So this is a retracement of the entire decline of 2011-2015. And the next one, which is the next target, is significantly higher, around 1484. What should we expect in the short term? It will be, for me, healthier to start a consolidation. So this is what we started to see over the last few days. So pullback, market consolidating recent upside move, then after that, resuming its uptrend to the next target. Keep in mind that the theoretical target of this huge base formation is significantly higher. I would say that in this case we are likely to go above 1600. Sorry. So short term, a bit cautious, possible consolidation, then long term, gold is likely to go higher. If we now look at the Bitcoin, a similar and even stronger upside acceleration over the last few months. So the Bitcoin made a major recovery over the last 3 months. And what we saw this week, and this started last week, is the strongest upside move since the bubble of the Bitcoin at the end of 2017. So a very strong upside acceleration. In Thursday email, I was highlighting a very important resistance, Fibonacci resistance at 13,255, which is a 61.8% retracement of last year's correction. So I was expecting a setback from this resistance zone. That's what we saw yesterday. And a setback on the Bitcoin is at least 10% decline. I consider that this move is quite healthy because the recent rally was too speculative. So what I would like to see is the start of a consolidation on the Bitcoin in the short term below this Fibonacci resistance. Longer term, I mean, the chart of the Bitcoin is now bullish again, and with possibly further gains ahead, but not now. As you know, there is still a strong negative correlation between the US dollar and gold, and that's what we saw. So the gold breakout triggered a breakdown on the dollar index below its rising 200-day moving average last week. In line with what I was expecting in the previous video, the first target, the initial target around 96, was hit very quickly. And what we are likely to see right now, so this is the opposite of the gold, is possibly the start of a technical bounce from this support zone. So this Fibonacci corresponds to the entire rise we saw earlier. So in the short term, possible technical bounce from the 96 area. But after that, I think we are likely to see renewed weakness back to 96 and possibly a further decline between 95, you can see this low here, and the next Fibonacci support at 94.50. So technical bounce, then after that, new correction on US dollar. This is the reverse is also true for the euro dollar. So if you turn the chart of the US dollar upside down, then you have the euro dollar. So significant upside breakout last week. A breakout also above the declining 200-day moving average for the first time since a long time. And in the short term, possible start of a setback, but I don't think now that the setback will go very low. And after that, we should be able to confirm the recent upside move and move higher, possibly back to 115.50, 116. Okay, so this is the outlook. If we complete the US dollar view with what's happening on the cable, so as I was mentioning last week, start of a base formation, and this is becoming reality. So I think that the British pound will continue, will stabilize against the US dollar, but now we are more likely to see the British pound bouncing back against US dollar. Now, if we switch to US indices, last week, I mean on Monday, I was highlighting the potential resistance line, and it was true. I mean the index failed to break above this line, encountered resistance near its May high. So the breakout we saw last week was not confirmed, unfortunately, and I think we are likely to see further sideways trading inside this big trading range. So the boundaries of the range are on the upside very clear, 29.50, 29.60, and on the downside not so clear, between 2800 and 2720. So my bet would be a continuation of sideways trading inside this range. What I like with this chart is that the stop loss for someone who expects a continuation of the consolidation process in July, the stop loss is very close. It's between 29.50 and 29.60. If we made a breakout, then I wouldn't continue to expect a consolidation of this move. So which means that if you are playing a correction from here, the stop loss is relatively clear and quite close. DAX is showing a similar pattern with the S&P 500. Okay, DAX is still far from its all-time high, but we can see that it's encountering resistance as well around its May high. So you can see this resistance zone, which is more or less a 61.8% retracement of the entire correction we saw last year. So quite important technical resistance, which is not ignored by the market. I think, as discussed on Thursday, that this could be a wave A, wave B, and there might be a wave C missing to complete the consolidation process because before the index goes higher. So once again, I think there is odds are favoring a continuation of this trading range, which means below 12,300, 12,400, and later on maybe a significant upside breakout attempt. But the timing is a bit short to expect a sustained upside breakout on DAX. This is all. Thank you very much for listening and have a great day.